Insurance rates. How? Your car insurance rate is determined. There is a specific formula that insurance companies use to calculate your auto insurance rates. It is more complicated than some of the most complex calculus equations. Powerful computers are used to determine a driver's risk analysis. Once a driver's liability profile has been determined, then it is compared to all of the historical records in the auto insurance company's database. And the immortal could not possibly assimilate the insurance rating system in its entirety, but a solid comprehension of the basics is all that is necessary. The components of determining an auto insurance rate. State law regulates auto insurance, so the state in which you live is the most important component in determining the price of auto insurance. For example, the state of Hawaii has extremely liberal liability laws and a deluge of uninsured motorists. North Dakota, on the other hand, has much more conservative laws and fewer uninsured drivers. As a matter of fact, North Dakota looks to a driver's pyramid. If there is a lower number of automobiles on the road, then there is less chance that an accident will happen. As a result, the average insurance premiums paid in Hawaii are almost 3 times higher than the insurance premiums paid in North Dakota. Apart from your state of residence, the principal factors that affect your rates are more personal and statistical. They include your age, your gender, and your marital status. Other factors that come into play are your driving record, your credit history, where you reside, and the make and model of your vehicle or vehicles. Why do age, gender, and marital status affect my rates? The auto insurance company's goal is to determine how much risk you are as a driver. Because they have years and years of data that they have collected, they know that drivers between the ages of 16 and 24 are involved in a higher number of accidents. Individuals between the ages of 50 to 64 are in the fewest number of accidents, and starting at the age of 65, people begin getting in more accidents yet again. Furthermore, by the time they reach the age of 75, they are more commonly in auto accidents than even the younger group of drivers. Statistically, women are in less accidents than men. Gender is especially important concerning people under the age of 25. Young men are in far more car accidents than young women. Statistics also show that this risk is partially offset, surprisingly, by marriage. Time has shown that married men ages 18 to 24 are in fewer accidents than single men. Other factors that come into play. An individual's driving record is an extremely important factor in determining the price of auto insurance. The insurance companies know that if you are in one accident, there is a higher probability that you will be in another accident. If you have a second accident, then there is an even greater probability that you will be in a third and so on. If you are in multiple accidents in a short time period, your auto insurance rates will go sky high. An individual's credit history is also a very important factor in determining their insurance rate. This is controversial, but the insurance companies have historical data showing that, as a whole, people with a lower credit rating cost more to insure. Where you live is an important factor as well. Your city of residence indicates how much traffic you will encounter on a daily basis. Also, some cities have a higher number of car thefts than other cities. One last factor taken into consideration is the make and model of your automobile. It is known that similar cars get into more accidents, some cars sustain more damage, and some cars cost more to repair. These are all important factors in determining the amount of risk you pose to the insurance company. How does this all sum up? After taking all of these factors into consideration, the insurance company assigns you a rating factor. This factor is then multiplied with the base rate for each type of coverage you have selected. As an example, an auto insurance plan will be priced at $300 every 6-month period for someone with a preferred rating. However, However, if your rating factor is 1.4 because you pose a higher risk to the insurance company, you will be charged $420 for the same coverage. This is determined by multiplying $300 times the rating factor of 1.4. Keep in mind that it is very important to realize that not all insurance companies use the same basic criteria to determine insurance rates. Companies weigh various risk factors quite differently. That is why it is extremely important to compare rates from multiple companies for your car insurance. One company may determine a rating factor of 1.5 for you while another company may give you a much lower rating factor or even a preferred rate. The only way to get the best auto coverage for the least amount of money is to compare quotes. There are many websites available that make this much easier and less time-consuming by offering multiple auto insurance quotes from various insurance companies. I started in the insurance industry because, like everyone else that needs personal insurance, I had spent countless hours comparing rates and researching insurance companies to find the best insurance coverage at the lowest price. After repeating this process a few times over, I decided to take this knowledge, study for an insurance exam, pass a test and set a goal to supply other people with this information in a more timely manner. An insured should pay a certain amount of fee to claim in the future, which may be monthly, quarterly or yearly, to receive the benefits in the future known as premiums. The insured should also pay a certain amount from his own pocket up to a certain limit when he attends the clinic, undergoes examination, treatment or diagnosis before receiving the benefits of his policy, which is known as deductible. The amount that should be paid as deductible is decided by the company at the time of signing the contract. The insured should also pay a certain amount every time he follows the clinic, which is known as co-payment, before receiving the insurance benefits. In order to treat the dependents of the insured pays to the insurer a certain fee known as capitation. Some companies provide a document to the hospitals that they shall pay a certain amount as compensation to the insured, and hence the hospitals should treat the patient considering the payment made from the insurance company, which is known as prior authorization document. Insurance plans may be comprehensive or scheduled. Comprehensive plans are fixed proportion of fees that are paid to the hospitals after the patient pays the deductibles. The comprehensive plans are paid in lump sum amount. The scheduled plans are the plans that are paid by the insurance company to the insured for meeting the routine expenses relating to hospital care, such as money for prescription, etc. Namely, there are two types of health insurance. One of them is fee-for-service act. The other one is managed care. The two policies are different from each other and also similar to each other. Under service for fee plan, the patient visits the doctor for checkup or other routine follow-up and files the fees to be paid to the clinic. The medical service organization may also file the fees that are to be paid for providing services to the patient. Under managed health care, there are mainly three types of plans: HMO, POPs. Many schemes are available for the three types of plans. These plans may be comprehensive or scheduled.